This is Steve calling from Kentucky. I wanted to ask about Datadog. I bought it back in November in the low 30s and bought some more at 60. I was wondering whether I should take my profits now or hold on to it for a while. Thanks.
All right, Bonawyn, the stock closed the regular session at $83.55. Like Josh points out, it's a $25 billion company now. What do you do with Datadog?
What do I do with Datadog if I'm him and I owned it at 15 and then bought some more at 30? I definitely take some chips off the table. And this isn't about picking tops or bottoms. This is about staying in the game, being a profitable trader, and exercising prudent risk management. I don't need to even look at the stock chart. If you've bought the stock at 15 and 30, you take some off the table at 83, and then you go on about your merry way. And giving a nod to Karen, she pointed this out in the last segment. If you're involved in cloud computing, even tangentially, the likelihood that you are going to have positive momentum going forward, I think, is quite high. So yes, I can see this thing continuing to trend higher, but it's a mixed bag there. You've got to do it in the right way that maximizes your profitability and minimizes your downside. But KPI optimization, I think that's a tremendous business to be in. They are an industry leader there, and I can see the utility of that type of technology, absolutely.
All right, KPI, key process indicator, for those viewers out there who aren't familiar with that. Carter Braxton Worth, I'm looking at CNBC.com right now. The data says that on a trailing basis, the PE of this company is, get this, 8,703. What does that tell you, if anything, about whether you would own it?
Right. It just tells us we can't rely on that. But what we do know is this, just as a matter of technique, when a stock gets re-rated, it usually follows through for a bit in the direction of the re-rating. And I'm not talking about an analyst community. I'm talking about price action. When Salesforce gaps up, when Zoom gaps up, there's often follow-through. Well, this stock gapped down on its earnings on August 8th. A lot of talk about decelerating revenue or maybe ahead of itself in terms of valuation, if you can even use those words. But the point is, a drop in gap on heavy volume, August 7th, 20 million shares traded versus average daily of 4. That's usually something to start to move away from. And then, of course, Bonawyn's making the good point. If you've got gains like that, time to move on.
All right. Thanks, guys, for the thoughts on Datadog here. Let's stick with the tech theme with our next question from Henry and Alex in California.
My question for you today is, who do you think has the upper hand in the TikTok deal? Oracle or Walmart and Microsoft, and why?
And my follow-up question is, what impact do you think the acquisition will have on the winning company's stock price in the short and long term?
Great questions. Carter Braxton Worth, we'll go to you here because these are big names that are in the acquisition hunt right now.
Right. I mean, so I can't speak to, so who's got the upper hand in terms of, TikTok and who's got this space better than that. And it's really the antithesis of looking at price action. What we know, right, is let's take Walmart, for instance, a very good stock that's now under pressure, or other retailers. We know the XRT itself has taken a bad hit to the downside after stretching. And so just stick with, if you can, something that is showing reliable growth and is never getting quite so steep as some of the other names we've been talking about for the past hour.
Karen Feinerman, I wonder if I might get your thoughts here. Walmart is not a small company, and it could be partnering with Microsoft, which is not a small company. You've got Oracle, not a small company. Is there a better suitor in that mix, or is there somebody else out there that might provide a better fit for TikTok?
I don't know. It seems like everybody in the world is looking at it, but I think that my guess, and it really is a guess, I'm surprised that we haven't had any leaks about this, since it could be a deal announced as soon as tomorrow. Who knows? Microsoft and Walmart, to me, makes the most sense. And I think the company that has the most upside from that is Walmart, because I think that can be somewhat transformative for their business. And I think that we're in the process of seeing a re-rating in Walmart. Obviously, the divergence between the Amazon, or the difference between the Amazon multiple and the Walmart multiple, backing out AWS for taking out their cloud business from Amazon. The retail business of Amazon trades wildly higher than the retail business of Walmart. And I think this would be a very interesting acquisition to help them accelerate e-commerce and to maybe get a higher multiple. Doesn't need to be anywhere remotely close to Amazon's multiple. But so to me, the stock that has the most sort of bang for the buck here is Walmart. And who knows what anybody's guess. But if I had to pick one suitor, the Microsoft Walmart team, I think, will be the winner, but I'm not sure.
Bonawyn, before we leave, I want to get your thoughts here. What's the most interesting part of this TikTok story in terms of your investing thesis?
I have very little to add in addition to what Mrs. Feinerman has pointed out. I think the Microsoft Walmart team makes the most sense between those two suitors, at least because of the cloud computing, the online distribution, the physical distribution centers, and the touch with the retail consumer, vis-a-vis a enterprise software company. So just natural synergies. I see them being able to integrate that business more seamlessly and unlock value for those reasons.